does anybody have a fire extinguisher? Because the stock market is burning down. We are seeing the stock market selling off. It's falling off of a cliff. What the hell is going on? We haven't seen a red day this bad in a few months. We're talking about negative 2% in the overall market. We're going to be breaking it all down in today's video. Is it a buying opportunity? Is this another buy the dip situation? Because we know the buy the dip crowd, they've been getting paid, baby. They've been getting paid. Or should we be stepping out of the way? Is this the beginning of the quote unquote real stock market crash? That's the topic of today's video. Pump up the subscribe button. The stock market is crashing, but pump up that like button. Go ahead, destroy the like button and the subscribe button. Pump them up. All right, so the S&P 500, we got the SPY chart on the screen, and it's been an ugly day to say the least. Negative 2%. We gapped down from the 440 range on Friday all the way down, hitting lows of like 428 today. A massive sell-off like we haven't seen in a long time, and it's shown better in an intraday chart. Look at this intraday 5-minute chart. Just over the last 3 days, boom, stair-stepping down all the way down from 455 to 428 in the matter of days. What the hell's going on? What is happening in the stock market? Why is the stock market crashing? Well, number one, we did a video last week. Last week, we talked about Joe Manchin, a big interview with CNN's Dana Bash, Joe Biden's mistress, and he said that he was not going to vote for that big $3.5 trillion budget bill. Well, why in the hell is that important? Why does that matter? That's one senator. He is the swing vote. If he's voting for it, if Kristen Sinema is voting for it, it's going to get passed. The stock market expected this bill to get passed. The stock market expected those $3.5 trillion to just rain down from thin air into the economy. Why is that important? Because anytime you have $3.5 trillion coming into the economy out of nowhere, it's getting into people's hands. They're going to stores and spending it. Where are they spending it at? What stores are they spending it at? Publicly traded companies. That's where they're spending their money, that $3.5 trillion. That would artificially raise these companies' earnings. If they have better earnings, then their stocks go higher. That's the way the market works. When money goes into these companies, they post better numbers. When they post better numbers, their stock prices go higher. Problem, it's looking like that budget bill is gonna be a big fight, and I'm talking about a big fight. Like a trailer park on Thanksgiving, you have Cousin Jimmy coming over to Cousin Ricky's house. Now, Cousin Jimmy stole Cousin Ricky's wife right under his nose at last Christmas dinner. Cousin Ricky came out and found Cousin Jimmy and his wife under the Christmas tree. That's the type of fight we're about to see in Congress. Number two, good old Jerome. We need to talk about Jerome and the Fed here if we're going to fully understand why this stock market is crashing. We have Jerome Powell in the Fed. They're meeting this week. Jerome Powell has been Hercules holding up the Colosseum with his two hands, or whatever the hell that statue of Hercules is, where he's holding that big shit up. Well, Jerome Powell is Hercules, and he's been holding up the stock market and the economy with artificially suppressed interest rates. Low interest rates, companies and banks can borrow money super cheap, and they can make money on the money they're borrowing. That's why the economy has been thriving as well. Well, they're meeting this week, and it's expected that Jerome Powell is going to go to bed. He's an old geezer, so he has an early bedtime. He's going to step out of the way and no longer prop up the economy. AKA, they're going to start looking at raising these interest rates. Investors are scared, big institutions are scared, and they have good reason to be scared because these interest rates raise, the economy contracts, and the stock market contracts with it. Think about it like this. Have you ever seen those National Geographic videos or Discovery Channel videos where animals are getting artificially inseminated? They got the turkey baster and they're artificially inseminating, or whatever the hell they call it, a cow or a horse. Well, I don't know where I've seen that, but I know I've seen it because it scarred my brain. It's just nasty and everybody's seen it in school or something. Well, that's what Jerome Powell has been doing to the economy, to the stock market. He's been taking this giant like 3-foot long turkey baster, and he's been just thrusting his turkey baster in the economy and injecting money into it. Once he takes his turkey baster out, he pulls it out ever so gently. Well, the economy's back to a place of natural market dynamics, but there's no more free money, there's no more imaginary money, and there's no more super low interest rates propping up the economy. We could see a contraction, and it could take some time for things to catch up to where they need to be. Both of these factors are what I believe is leading to this current sell-off that we're experiencing. And if we look at a weekly chart, this is one of the biggest sell-offs that we have seen since the Rona sell-off. So back here is the Rona sell-off. Then we have one sell-off, one or two sell-offs bigger than this one. All these are smaller, and then we have this current crash or correction, whatever you want to call it. So I do believe this is a legit correction. We have Morgan Stanley coming out saying they expect, in a good case scenario, Morgan Stanley said they expect a 10% correction. In a bad case scenario, a 20% correction. I think we're down 4 or 5% off the highs right now, so it may be a long way down. We don't want to catch a falling knife, but abso-freaking-lutely, this is a buying opportunity. Every dip from a long-term perspective is a buying opportunity because stocks only go up, baby. We know that stocks only go up. Sure, there's corrections. There could be a 3-4 year correction, but 10 years, 15, 20 years down the road, good companies, they go up and their stocks go up too. So this is absolutely going to be a buying opportunity for me. What I like to do in times like this is I like keep some money dry, keep some powder dry, some ammunition on the sidelines, ready to fire off like brat, brat. Like Gucci Mane and Pooh Shiesty, we're going to be firing off. We got our glizzy ready to roll. All right, so our glizzy's ready to roll. That's step number 1. Step number 2, you got to have a plan. Every early investor I know, they tell me, Kevin, I'm not buying yet. I'm going to keep all my money on the sideline, and the next time the stock market crashes, I'm just going to load up, I'm going to load the boat, and I'm going to get filthy rich. But they never have a plan. They don't even know the stock market gets crashing, and it's happening right in front of their eyes because they don't have a plan. So what I do is I write down my 10 top stocks that I want to own long term. I'm talking multiple year investments. And then I set a buy zone for each of those companies using fundamental and technical analysis. Where do I think this company is going to be in 10 years? Is it a growth investment? Is it a value investment? Where are the support areas on the chart? What are their projections over the next quarter over quarter growth? Shit like that. You got to have a plan. So have your plan, have some ammo on the sideline, and then you're ready to let your glizzy slime them up. So, in conclusion, I do think this is going to be a steeper, bigger from a percentage standpoint crash than we've seen leading up. I also think it's going to be a really good buying opportunity. We're going to get the opportunity to get some really good long-term stocks at discounted price points. And this current correction is not only a equity or stock correction, we're also seeing Bitcoin sell off, Ethereum sell off, and I am going to be buying these two assets quicker than I'm buying stocks. I think stocks have a further drop than I do crypto. I think Bitcoin is a buy today right now at 43.80. We have support, boom, boom, tons of volume traded in that area. So there's not that far of a drop until you hit support on the Bitcoin chart. But my top crypto buy still is Ethereum. You guys know I love me some Ethereum because of the NFT aspects, the smart contracts. I think Ethereum is absolutely the top cryptocurrency to buy right now. It's trading right above 3,000, and it's just a great steal in my opinion at that level based on potential future growth. To wrap things up, I do think we see more downside in the overall market, but that's a good thing, right? The stock market has just been going up and up and up and up and up and up and up. And I don't feel good buying stocks at those prices. I just don't feel good. I want to feel good again pressing that buy button on those long-term investments. And red days like this make me happy because I know they lead to good long-term holds. All right, I love all of you guys. I'll catch you in the next video. Until next time, deuces.